Hi everyone, welcome to Pearls of Fisdom with Nirmal Bang. I'm Avan Dabash. Now, the real estate sector, as we know, has played a huge role in the country's economic growth over the years. In fact, the latest budget by the Finance Minister Nirmala Sitharaman has significantly altered the real estate landscape with diverse impacts across various market segments. And that's what we want to discuss. We also want to talk about the outlook of the residential and commercial real estate landscape, how it's going to entice global and local investors in the long haul and increase productivity. So, what does the budget for the real estate sector mean for you and me? Let's understand that better. And who better than Dr. Prashant Thakur, Regional Director, Head, Research and Advisory at Anarock, to join in. Thank you so much for taking time out. And why don't we jump right in and talk about the impact that the budget has had, in particular, the long-term property investors being impacted by the indexation benefit on capital gains tax. That could potentially reduce returns by up to 20% for properties that are held over 2 years. How are you looking at these tax changes and what does it mean in a layman's stand?
See, from a layman point of view, when you hear that the indexation benefit has been removed, gives you some kind of negative feeling that indexation benefit removal would kind of increase my capital gain tax outflow. But if you really kind of take a deep dive, first of all, you would figure out that property which has been held before 2001, the indexation benefit would continue. And the second is that the property which have been bought recently, I think over there, the tax impact is not going to be much in this new tax regime because, if you take the impact of indexation that the government earlier allowed, in that the average inflation was considered somewhere around 4 to 5%. And in case if your property would have appreciated in high double digit, your new tax regime where indexation benefit has been removed, but your overall long-term capital gain tax has been brought from 20% to 12.5%, would be marginally better than what was earlier. So in a nutshell, it's case-to-case basis, but in an overall scenario, if you see, there's not going to be much impact in recently brought properties and properties where the appreciation has been significantly above than inflation. So that was the taxation part. Now, if you look at other fundamental factors that are kind of driving, or let's say that budget that had was, it continues its focus on infrastructure development, transit-led development, and also its focus on affordable housing. So overall, it was a positive budget for the overall real estate sector. All said and done, the biggest beneficiary of this huge infrastructure spend is going to be the real estate industry itself. So I don't think that just this indexation, the benefit that has been taken away, would kind of cast any negative spell on the growth prospect of the Indian residential real estate story.
Okay, fair enough. And let's also talk a little bit more about, one of the standout features in the budget, which was the PM Surya Ghar Muft Bijli Yojana that's going to install, rooftop panels for a crore household. How do you think this is going to drive the demand for solar panels and that related infrastructure? And, would that in any way impact the real estate space as well?
Any positive news which is related to your infrastructure, or let's say kind of other qualitative aspect that is going to eventually impact your lifestyle is going to definitely benefit. This rooftop, I think, would be beneficial for most, I would say affordable and budget segment. It's not going to kind of be a game changer for the luxury segment, but overall, I think this is a positive move for the residential real estate, and I think it should be looked in a positive way.
Okay, sure. Let's also understand your outlook on how you're looking at all of these changes and what it could mean when it comes to, for example, the change that we saw that the budget has proposed this reform in stamp duty, and that encourages states to moderate the high rates. It's offering reduced rates for women. Do you believe that this is a very progressive step and it's going to make transactions a lot more accessible now?
I think definitely this is a very progressive move, and FM Finance Minister has urged the state governments to look into this because this is going to be a state subject. But I don't think that the state governments are kind of going to increase the stamp duty, or let's say kind of either reduce it. Yes, I think the reduction of stamp duty for women home buyers would be actively continued, and many states have this thing. And it is kind of encouraging to see that FM making this urge to the states to kind of bring down the stamp duty for women. I think this definitely is going to be a positive factor for the overall real estate. And if you look at the women's participation in the overall real estate buying, I think this is slowly growing because of this factors only. Because if you look at the working population and then the independent women that are kind of now actively going out and making a real estate purchase, I think this is going to be a very positive factor for them.
What about the fact that there's been a lot of emphasis on creating this transparent rental housing market? That's rather forward thinking as well. How will that help attract more institutional investors to the rental housing market? Do you think that that's also going to lead to the development of high quality rental properties?
If we have to achieve housing for all objective, it cannot be achieved only by just constructing new homes. You have to have a very progressive and transparent rental housing market active in the country, the way we have in other developed countries in West. The only problem that is restricting this rental housing development in India is because the rental yields are still very low. And if you look at the land prices, most of the developers are very reluctant to just build for rental purpose because the land prices are high, and the entire unit economics doesn't work, and the rental policies are not very clear. The rental policies have been in discussion for almost I think this is the third or fourth successive budget, but yet the states are to formulate it. And if you look at the rental policies that have been announced in this budget, it was more for the factory workers, where FM has made a provision that there should be a dormitory like rental accommodation made available by the business owners. So it was not exactly some constructive commentary on the rental policy. But having said that, a vibrant rental housing market is definitely going to help the overall real estate market, because when you invest in residential real estate and you have a vibrant and transparent rental economy, it kind of really increases your rental yield also, and that's where your investors are encouraged to buy property, because they find a very vibrant rental market where they can put their property on rental. In absence of a rental market, you'll see that a lot of inventory which is owned by investors or end user also are lying vacant just because they don't want to rent it out.
I just want to understand, that first question that I was talking to you about as to how it's really going to disrupt the luxury real estate market. Do you think that the increased taxes on property transactions could maybe slow premium property sales? Is that a bit of a worry? And what is it that you're looking at when it comes to property prices as well? What are the projections?
See, I don't think that luxury market, housing market, will be impacted by this decision. Couple of positive things also been announced. The holding period has been brought down from 3 years to 2 years. Now, let's say if you buy a property, luxury property, and in 3 years you sell it, let's say property prices have appreciated by 25%. Let's take an example. Even if the indexation benefit was there, I don't think the inflation would be so high that it could result into a capital gain loss, right? Capital loss. So in a context where the property has been recently bought, let's say 2 or 3 years back, and the prices have appreciated significantly, I think indexation and non-indexation, the scenario would have not impacted the buying decision. And that is reflecting in all the real estate stock prices also. Post budget, almost all the real estate stocks have kind of performed well. The transactions are happening. The developers are, for example, let's take an example of DLF. They have projected a very robust growth for the rest of the financial year, and then most of the launches are in the luxury segment. So I don't think there's going to be an impact. Now, coming to the pricing part, so I think we have seen a significant amount of price appreciation in last couple of years in the range of 15 to 25%. So the increase in price from here, I don't think is going to be significant because of a couple of reasons. As I said, that the prices have really shot up quite significantly, and also because of this budgetary announcement, though it might not impact the long-term stories significantly, but still lot many people are trying to figure out the impact of indexation, whether it's positive or negative, and in that scenario everybody tends to wait and watch. So in my opinion, this might be a short-term hurdle, but the long-term prospect, I think, is quite steady. And we should not forget the fact that we are talking about a scenario where most of the launches are happening by grade A developers. It's a scenario where the balance sheet of almost all the listed developers and also grade A and grade B developers is the strongest at this point of time. Almost all the developers, including grade C and grade D, have been able to bring down their debt significantly. Look at the rise in their sales value. Look at the increase in their profitability. So I think we are talking about a very steady state where the sales are happening quite significantly, delivery of projects are happening on time, the developers are quite bullish, and that also reflects in the land acquisition that they have done. The year 23 was a record year in terms of land acquisition, and if you also consider the fact that they have a very healthy balance sheet, it all points towards the momentum to continue. But yes, the price appreciation from here on, I don't think would be in double digit. It would be in the range of, let's say 2 to 5% for coming years, because as I said, we have seen a steep run up.
2 to 5%. Okay. And, I just want to talk to you about the sector as a whole. We've seen this huge housing boom. There are a lot of tier 2 cities, Ahmedabad, Indore, Jaipur, that are supplementing the growth that we're seeing in some of the metros. What are some of the emerging markets to watch, according to you?
So I think Lucknow, Ahmedabad, Kochi, Indore, Bhubaneswar are a few cities are on top of my mind, and then they're doing pretty well. And this is also, I would say, supplemented by the huge interest by a lot of IT and ITS companies who are thinking of setting up their secondary base in these cities. So what is happening is that, post-COVID, these tier 2 cities are kind of witnessing good amount of interest from these IT ITS companies who want to move to a cheaper destination, or let's say they want to move closer to the talent, and these are the cities from where most of the talent comes to these metro cities to work. And also, if you look at the connectivity in terms of airport, road, infrastructure and rail, all these the tier 2 cities are now well connected with the tier 1 cities. So these all factors are really helping tier 2 cities to rise up and kind of also participate in this broad-based momentum that we are seeing.
Yeah, indeed. And given that we've seen a huge surge as well in the year so far in Q2, I understand that there's been some $2.7 billion in terms of investments in India's real estate market. What do you think the next leg of growth within India's infrastructure and real estate market is really going to be led by? And how do you see it growing? What kind of a pace are you seeing it growing at?
Land parcels that are being opened up, and thanks to the good amount of infrastructure that is coming up, the supply is kind of going to jump almost 2 to 3 times in coming years. And as I said earlier, that tier 2 cities are going to definitely participate in it, because if you take into account the airports, this Udan scheme, which is connecting all these small tier 2 cities with the main cities, the movement is going to be very easy. The movement of talent from one city to other city is going to be very easy. And the price appreciation that you have been talking about is also encouraging developers to look at new destination where land parcels are cheap, where they can find new growth pockets, and that's where these tier 2, tier 3 city comes into account. We also need to take into account that in 2023 we sold close to 4.8 or 4.9 lakhs of unit in top 7 cities, and it was the best ever sales in terms of number of units in last 15 years. China, it sells close to almost 1 crore of house in a year. Not also factoring the all those negative news that have been coming in, let's say even 50% of those houses were actually occupied. We are equally in terms of population of that country, and we are just even 0.5% of that entire sales, and we are calling it as a record sales. So looking at the way our population is growing, looking at the way the cities are growing, and looking at the way the economy is growing, I think we are only looking at the start of an upward cycle which is going to last for another 5 to 6 years, and the volume is definitely going to be in the range of 10 to 15 lakhs units sold across, I would say 12 to 15 cities. Right now we only focus on 7 cities, but the growth is going to be more broad based, not only limited to tier 1 cities, which is MMR, NCR, Kolkata, Hyderabad and Chennai. So it has to be broad based, and we have started to see the early signs of that growth pattern from last 2 years.
Okay, and so which part of the market is it that you're likely to see a buoyancy in sales? Is it going to be more premium luxury homes? Are you going to look at the affordable housing segment? Is it going to be the mid-tier? What's the outlook?
If you look at the buyer's profile and the budget segment, 80 lakhs to 1.5 CR is the sweet spot where the actual demand is. What we have seen in last 2 years, that the upper segment has really driven the market right now. But now we'll start to see the participation from budget and I would say mid segment more, and that's where this focused approach of the government, where you will see that Pradhan Mantri Awas Yojana, 3 crores of additional house has been announced, and 2.1 lakh crores of additional capital has been allocated for urban housing. Pradhan Mantri Urban, not rural. So going forward, you'll see more participation from the budget and an affordable segment coming into play. And that's where, I've been talking about a more broad-based, volume-driven growth in residential real estate. In last years, what I have seen, it was more driven by top-end segment. It was more of a K-shaped recovery, where luxury and upper luxury segment went up almost 3 times of their current size. Affordable, which was 47% of the entire sales in 2017 and 16, has fallen down to 19%. Now the time is that has come that the segment needs to fire, and that's where all these incentives under Pradhan Mantri Awas Yojana should come into play.
And finally, give us a sense as to what your outlook is. I mean, you're at the forefront of a company that is watching the rapidly growing real estate sector evolve. Any pearls of wisdom that you may have, especially for someone who's looking to put their foot through the door within the real estate space?
So, if you're an end user, I think this is still one of the best time to buy, because you have good amount of supply coming from grade A developers. And let's say, yes, the prices have appreciated, but still we need to take into account that we have seen a period before COVID where the price did not appreciate for almost 10 years. So this was just a catching up. And let's say if you're a long-term investor, I think there are still a lot of opportunities to take a position in emerging tier 2 cities, and also some good micro markets in tier 1 cities as well. And the only word of advice for the investors would be that they should have a long-term horizon, because the era of quick price appreciation, where you used to see that in 1 year or 2 your price have gone up by 20-30% are behind us now. So whatever we are going to see is a normal growth. So you should look at a long-term horizon. But yes, I think this is an industry right now which has kind of really got past all the misdeeds. Post-RERA, the sector is very clean. All the grade A developers are now participating in the market. They're actively leading this surge. RERA has ensured that the delivery is happening on time, the quality assurance is good, and affordability is still within limit right now.
All right, that's good advice to keep in mind if you're looking at investing in real estate at a time like this. It's been a pleasure interacting with you, Prashant. Good to have you. Thank you so much for joining in.
Thank you. Nice talking to you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.